Hello, good morning, everyone. How are you guys doing? Let me check my connections here. Hi, Hillary. How are you? So let me see if it's on my side. Could you guys hear me okay? And just let me know quickly. And hey, I see a few familiar face, Hillary and Karen and Rowdy, and just quickly check. You guys see me fine? I'll type in some things. I'm glad to be meeting all you guys on Zoom here today. Thanks for joining. Such a short notice, and it's I find that now meetings online is weird. If you give a lot of head time to you analyze a meeting way earlier. Hi, Jonathan. It's really hard to. Let me turn off the Outlook. It's really hard to. We have so much things to do nowadays. Long story short. Hope you guys well, and I don't intend to be a super long meetings for everyone, and I see some new faces, I see some very familiar faces, and just want to say thank you for joining us today. As people know me, I've been doing this Zoom call more than a year now, in the weekly Zoom call more than a year now, and I've been doing meetups. I've been doing physical meetups, and since 2017, I have been I've been investing with and also sharing investment for a while now, and I partners and I invest with my investors in the States and in Canada. My thing is it has been hey Larry, thanks for typing in, yeah, I think I see you come in and on online again. So welcome everyone, and welcome everyone for joining us in such a short notice. I just sent an email note, as I said, this morning, reach out to the group that people to have connected to me, and I'm connected to them. I'm grateful to have you guys today. So so today's topic, let's jump into that. I say that it's actually an email that I forward that out. It said it is inflation ready. I think some of you guys probably come to the meeting because it is caught your eye, because if you look at the stock market for the last couple of days, it is predominantly that theme, right? Is inflation ready? I mean, there's a lot of news on the Fed, on the U.S. Fed, saying that is the inflation coming? I mean, is it coming yet? I mean, I'm like you. I get to get my hand on multiple hands, and by the way, have you guys able to see my screens, right? Let me know if you can. I'm pretty sure I shared, but I believe in watching a lot of news and different kind of news, but I also believe in when you go to the grocery market. When you go to the grocery market, or when you go to buy a hamburger, buy milk, do you see that coming? I certainly see inflation is already here. If it's here or not, it is already here. One of the things is why I partner with investors, and I share with my on my meetups. and Zoom calls is investing in real estate. It's definitely inflation hatching the inflations. I think if you think about, I'm an immigrant myself. I come to this great country with my parents when I was 17 years old. For many of you guys don't know my background, and I remember the housing in Calgary was 1,600 square feet for like single homes. The attached garage was 160,000. And that is 1997, 1999 prices around that time. So pre 2000s, and of course now single homes in that area is 500,000. So some of you guys come from Toronto, and you don't need me to remind you how well your real estate has been doing. But yeah, I'm really believing in what real estate has been doing well for the last 70 years, and I continue believing it do well as soon as our interest rate don't go too crazy. I mean, we have experienced how the 80s has been doing that to our real estate market. So that is why, like, that's the reason why I say in this today's topic, why I invest in U.S. market, why I invest in cash flowing opportunities. I think it's very prudent and very important to be able to invest in properties that can cash flow, to be able to bring you a cash flow check every month, a month in, a month out. Whether you decided to do yourself or you do it with others, I do think to be able to get that, excuse me, to be able to do that is one of the, I would say, one of the strength that when investor like us to invest in real estate, that's what I believe in. You're getting a rent check every single month, and we cannot predict what the real estate market in the next 2 years or 5 years, it will go up or will go down, and it will continue to be like that. History has teach us that. But as soon as you have a cash flow coming in every single month, every single quarter, every single year, you can write it out. And we have seen it for our real estate. And when I finish this story, I'm going to start our meetings. And Calgary market was Calgary market was down in 2014 because of oil price, and so 2014 all the way to 2019 was down about 10% for all these 5 years. And all of a sudden within the 6 months, if you can carry it, if your investment is cash flowing like what I'm talking about, it's going to be and you can actually actually realize that right now that it has go up for the last 6 months. So yeah, I know, and thank you for sharing. And yeah, I don't know what you can buy in $160,000 now, right, Hillary? And we certainly cannot buy nothing here in Calgary right now. But I mean, real estate has always been doing well, and I strongly believe in, again, cash flow opportunities. And but let's just jump started. And hi, Calvin, welcome. So a little about myself, a story of myself. I invest my background is engineer, so I have been an engineer for most part of my life until I was after 30. So I just turned 40 last November. So I had been engineer all my life. I started investing in Canada in 2006, and slowly grew my portfolio in Canada, and then slowly investing in US. My first investment, in fact, was in 2012 in Phoenix, Goodyear area. That's my first taste of my US investment. And then I also ventured out to Hong Kong and China, which is because this is where I'm from. And of course, single family most of the time at that for the big chunk of time. And then I ventured out to multifamily, and got our first multifamily projects. In fact, Hay2Brick is one of our investors here. So So I would love to share more, so that's why how I started this group with people, with started really really small. Right now, we have a good network of people who will come consistently, and before we turn this all to Zoom call, we I mean online, we were having monthly meetups at Calgary Library, and we have a lot of fun. Sometimes we have 50 people showing, sometimes we have 30, sometimes we have 15. So we pick one topic in multifamily, and we just dive in and share and share with investors, whether they are residential, whether that's real estate or different type. So we just meet in that room and in the library, and we have a lot of fun. We have talked about real estate, talk about deals. So that's how we started. All from coming from actually 2017. Actually, in not in library at the time, we were starting in coffee shops and rent rooms, and then yeah, we just started, and then we keep doing it. Hopefully, I can meet physical investors, meet physical real estate investors on face to face, because I honestly, I'm a little bit tired of doing this. I want to meet people face to face. I want to yeah, I'm like you guys. I want to talk without the mask on, and I want to actually recognize your face when we met. So I'm looking forward to do that. So our numbers are doing really comparatively well, right, in US compared to Canada, but I think Canada is catching up. So that's a great news. And hopefully our lockdown is going to be done very soon in Toronto, in Vancouver, in Calgary, and other part of cities in the countries. And I have been in the US 5 times for the last since November. So last 6 months, 5 months. So I see it slowly opening, and I actually just come back from the US, and because I was doing inspection last week. I come back from Ohio, and and I see and I was in Texas earlier, actually in April. So I get a glimpse of different areas of the United States, right? And then when I come home, I see the different a little bit comparison, and I certainly see U.S. has been opening up in terms of travel, in terms of when I go to. And one time, I in fact I intentionally go to a shopping mall, and in the U.S. And I wasn't grabbing it. I just wanted to feel how is it like that was in Texas, and that was amazing. The people was opening up, and it's just one good thing to see. And I hope that we will see that very soon in Canada. So today's Zoom call, I want to focusing on three things. Is quickly of a market updates in US, what I see, right? And second thing is, so a little bit touch on the market updates. So I have on November to now, I was in Texas and I was in Ohio. So I probably seen about trying to put a number. One time I see a lot, let's say 50 properties, walk individual 50 apartments buildings during that time. And I want to report on what I find. I want to report on what I find in terms of the market, and the real estate market has been hot online. I'm sure you guys seen that online on news. And I want to kind of give my little bit updates when I go to the field. I mean, when I go to the site, go to the properties and walk the properties with the brokers, with my property managers, and what I see, and talk to the tenants. Right, sometimes I'm able to talk to tenants and talk to the contractor. What I've been seeing, talking to the lenders, and the real estate brokers, showing the listing. So I definitely get a lot of information when I walk on these properties. So and then I want to talk about one opportunity we are offering right now, right, for our investors. And I do think it's a great opportunity from basing on from my firsthand on boots on the ground experience when I walked the market multiple times. I was in Ohio 4 times since November. So I see quickly opening up, and I see the progressive opportunity that is offering for a real estate investor like for yourself and for myself, for many others. So, and then I want to talk about why I still think investing US is great reason. I mean, and it's I kind of already giving up because of cash flow, but I want to dive in a little bit so that we can talk about more, and then yeah. So I think what I see a little bit of the market. So as I said, I've been working in the market since November. I was in November in Ohio, and then I was January in Ohio. March I was in Ohio, and then April I was in Texas, and I come back last week, from Ohio again, and the rent is going very very fast, and that is kind of the new thing that I see on all apartments and good locations, not so good locations, and the deals are doing in full price, and if not higher than the asking price, and that's a lot of adjustment in terms of buyers going into market, and sellers has not been since the pandemic. Sellers has not been kind of decreasing the price since last year, and then buyers slowly as the economy moving up, and opening up, and we are moving, and exiting this pandemic phase. And I know that's still quite a bit of uncertainty, but as you and I monitor the vaccine numbers, that's majority, that's a big part of the population in U.S. and Canada have get the first dose and the second dose of the vaccines, and I would say, when last year from March to September we have been bombarded with all the bad news of pandemic, and so now this year we have been bombarded with all the good news with the opening or the subsiding of the pandemic. So I just give you one experience. I was walking 29 units, have no experience, no intention of buying it, but I just want to see, because it's a public listing, right? We're trying to stay away from the public listing, but this is it. So 29 unit at 1.5 millions, and I was giving 1 hour to walk the property. I couldn't get inside couldn't get inside any units because it's fully occupied, and the property is not in a good area. And I'm going there to kind of do my market survey, right, so to speak. And so there's 3 other buyers walking with me. One lady walking directly in front of me. In fact, I was seeing the same. We're competing, so to speak. I wasn't as a big. I'm not trying to buy that property, but I want to see what is it like. So that is a whole bunch of mom and pop investors going into real estate, and but what surprised me is actually the competitions. This is my favorite. The competition on single family is so high that some of these high, like mid-level, high-level single families investors, they are moving on to some of this, and this, as I said, like 29 units, 1.5 million in Ohio, property that can give them cash flow. But this is what I find. I have talked to multiple brokers, and in different market, as I said, like, in big small market in Texas and big small market in Ohio, and I talked to my network who have a tap on market such as the Sun Belt market, so to talk about the Florida, Georgia, Phoenix, those kind of area, and all over the board, the U.S. real estate market is surging so high that that's not enough supply. Basically, that's the thing. It's not enough supply. Our apartment that we own, we got weekly requests. Are you selling? Are you selling? So there's not enough supply, and it's such a great opportunity to be a seller right now. It's definitely a sales market, and all type of real estate, and so this is kind of what we know online, right? You guys already know that that's happening. And I saw a whole bunch of report talk about capital going to the Midwest market, going to the inland market, apart from, the major population cities, the major market, going to Midwest market, going to Indianapolis, going to Ohio, going to Dayton, going to Cincinnati. But I like to see myself, and because I have to see myself. So that's the predominant theme of what is the market is doing. The market is so hot. The market is having multiple beats. The multifamily are selling in gotten contract in days. So I'm not talking about your typical Ohio 100,000, 50,000 single family property. I'm talking about multifamily on upwards of 800,000 to $2, $3, $4, $5 million. Smaller multifamilies, they gotten contract in a matter of days, if not a week. So that is confirming what I've seen online. That's confirming what all this report is sharing that we have been reading is there's a lot of capital, institutional all the way to mom and pop capital, by the way, chasing physical hard asset. And why I mentioned that and why I want to talk about that is because it's really actually tying very nicely for what I want to send it this email about an hour ago. This is inflation ready, and how so? And we're going to touch on a little bit of that. But the rent is going up very, very, very fast right now on almost all the market. I don't want to say that, but it is basically what I'm seeing. And what I'm seeing when I'm seeing my properties performing, when I'm seeing the property I'm trying to buy, and the property and all the information that I'm seeing online. So this is case closed. I want to confirm what I see online, and the market is going from hot to very hot to insane. So of course, all this is there's one overhanging questions is so how do you buy correctly, right? How do you buy correctly all the way from single families all the way to multifamily? So the due diligence is very, very important. This is, even though this is not what I'm about talking to, even as a seller's market, you can always find expensive stuff you can buy, right? And but due diligence is very, very important, and that's why you need to be able to do your due diligence correctly, and do the checks when you got on contract, and you need to go and see the properties and do all the inspections. So and I'm moving on, and so I kind of put this two sentences because when real estate going so fast, the price going so fast, one of the reasons why I remember years ago when I get into real estate, I remember this, and I know this is all fashions now, and it's it's the problem is cash flow, right? The cash flow is a problem. No, I think cash flow is the solutions. And I put it as a question mark. It's kind of like a little bit of a question mark, of a joke, or whatever that is. And it's really hard to cash flow, right? It's going to be even harder to cash flow as real estate prices keep going up. It's just a simple math, and the rent, it will increase, but it's never increase enough so that especially if you're buying major metropolitans, and even it's a smaller Calgary cities like Calgary, 1.5 million people, and it's really hard to cash flow. So I have that problem years ago. I have that problem since 2006 when I invest in condos, apartments in my hometown, and and up until 6 years later, I found out that this is still the problem. I can't do that. I can't do that in Canada. I can, especially for our business model, is to be able to put the cash flow for the investors. So it's being able to cash flow and also being able to appreciate the asset is a very, very important. And in fact, that is why we invest in real estate first. Before we invest in US, I want to invest in real estate because I want to have cash flow for my retirement, for when I don't have a job, right? When I don't have a job, I want to have the cash flow every month coming in to be able to supplement the income. I mean, that's why I invest in real estate. Otherwise, I invest in crypto. It's a little bit of a joke. And I have this, and I'm bringing up bring up. I don't know whether you guys can see. Um, I have a friend who is a crypto investor, and because I sent him today's price on bitcoins, and of course, if you pay attention to bitcoins, you know what I'm talking about. Bitcoins just dropped 40% today. So being into crypto is not stressing at all, and is a gentleman of older gentleman, and his if you see that on the right hand side, is John, 26 years old. So anyway, so otherwise I invest in crypto or invest in other more risky asset. It can drop 40% overnight, and it has happened. So I mean, there's a lot of alternative investing in real estate. That you can invest stock, you can invest company, you can invest in RSP, you can invest funds, you can invest in crypto. But ultimately, for my own reason, I don't know what is your purpose. For my own reason, invest in real estate, and particularly invest in U.S. real estate, is so that I can cash flow. And that's why I go to market that have the ability to cash flow and have the ability to increase the equity by increasing rent and do it that way. So this is kind of literally what I said. Like when cash flow, when the local market is going like right now, in Calgary has never made a cash flow. In major cities, really hard to cash flow. In Canada, same as in US, and it's cash flow is like a dream, right? It's like getting further and further away, because for single families, including me when I started, invest single families, meaning that I have to manage it, meaning that I have to do the work, so that as active investors, I have to do the work to make the cash flow works, to build a under basement suite, right? To buy a single family is like 300,000. I'm talking about Calgary price here, okay? 300,000, 350,000. Put legals and the legal basement suite or illegal basement suite at the beginning. But ultimately, you're trying to build that multiple stream income, right? Multiple stream income, so that you can get the cash flow dreams coming. However, as the real estate going into, I would say, the next phase is really going to be interesting. As you see, all this capital is going into the real estate market, because you saw what happened in the Dow Jones, in the stock market today. There's a lot of fear of the inflation, so there's a lot of capital exiting from the paper market, and they're going into physical market. They're going into physical properties like this, and you can touch the bricks, and you can get the rents if you're so inclined to, and you go there and to invest in hard asset. But cash flowing part is only one part. The second part is the risk, right? I survey a lot of different market. Some of the market is going so high, and I'm not talking about real estate. I'm talking about U.S. and investment versus some of the other different market. Some of the market has been going so high, like, Calgary certainly go high and higher, harder cash flow. Vancouver has been, and that's not even talk about cash flow and major market like Vancouver and others, major cities. So I think the things when, as real estate investors, whether you're single families or multifamily, is you have to think about is, what is your downside risk now? If the real estate market has gone so high for the last 5-10 years, and if your rent is not able to service your expense, which has been like that for years, but the market is going so good, it's going high. So the question is, if you have 10 bucket of capital, will you still put in all the capital into one bucket, which is like growth for the last 5 years, or you're starting to think about maybe I should put some of the bucket of my capital into a different market, like cash flow market, that, if the market could correct, and if interest rate go up substantially, and I know what Fred has been saying, that the Federal Reserve in US and Canada Central Bank has a little bit different stand on that, and especially the Canada, in fact, I know you guys reading news like I do, and I think the Canada central banks had a little bit different views as in how long they hold interest rate low. So that will certainly push a lot of capital down the south from, if you invest in Canada, you invest States. And of course, that if the interest rate in Canada is going to start to go up versus the US market is going to be, will we start to go up, but later than that, what it does is creating a flows of capital from real estate market from the top, Canadian market to the south. So that's a consideration we have to be thinking about. But again, going back to the questions, if some of this market started to correct, so our cash flow did not work, does not work today, and certainly will not work when the market crash or correct. So you better think about or consideration, or started to considering what is your strategies, and maybe is to still invest in high growth market, like the major capital market, major populations market, but to thinking about some other smaller market can help you to generate the cash flow and able to and the market that hasn't been appreciated that much, so to speak. So it's something that we all have to considering about, and no one's a crystal ball, and it's a market is a matter of buying in the right time. Of course, we always want to, but who doesn't have who have to have a crystal ball? No, I don't. So it's coming back. The next question: can your income support the expense? So if you are with investors, if you are apartment investors, that's not even a question. The first thing you have to know is, do you know what rent you're coming? Do you know your property expense? That's all coming back to buying correctly, right? And then buying correctly meaning that you have to knowing your income. You have to know when you're going in to fix it all up. The property, single family or multifamily, doesn't matter. Will the property income or the gross income rent able to sustain the property expense? So this is very important questions, because when we invest in single family, multifamily, a lot of times we caught up with the hype of this is going to keep going up, this is going to keep going up. It likely will, and it could going up for another 2 years. But again, the question is really come down to, do you have to underwrite it conservatively, right? Meaning, because at the end of the day, one thing that is different, if the next crash comes, and it's just coming to my mind, one thing that's different when the next correction comes versus what the correction we had is, the next correction won't be a pandemic, and won't be a forbearance for the bank to come in and say that, and there won't be a government will come in and say that you're going to bail you out, right? And so what I'm trying to say is, there's no pandemic that's going to be coming in saying that, because of the tenants that didn't pay rent, and you are able to not pay your expense, and not pay your property manager, not pay your insurance, not pay your property tax, and not pay your mortgage. So you really have to look at it more. I would say the price is going up, but the thing is, you have to buy it correctly, buy it prudently, because it can be dangerous as well. It can be dangerous as well if you don't pay attention to your due diligence, don't pay attention. All the expense could go up, and the price of mortgage are going in and could stay at where it is, and if the rent doesn't go up. So but that's why thinking about 2012, and that's why when I was investing even in single family, that's why I'm going and saying, you know what, I need to invest in the US. And that's why slowly after and I partner with other people and investors that to invest in the US, because it's just so much different than the market. I still live in Canada. Of course, my life is still invested in Canada, but I don't want to invest in market that I cannot take me hold for a long time, meaning that if the cash flow is not there for long term, sorry. And I think for you invest in long term is really important, meaning that, if you invest, even if you invest in single families or multifamily, you need to be able to hold on that 3 to 5 years. If the market did correct next 2 years, and then it's going to take 2 to 3 years for it to come back up, and you see the invest in real estate do it all the time, institute in market do it all the time, you have to be able to hold for that long. In the meantime, what you need the cash flow coming in. So I kind of I put it it's kind of like Warren Buffett investment philosophy. I kind of like it because when the market come down, when the bank, if they do, I see this movie one time because I'm come from Hong Kong. So during 1997, and real estate market crashed in Hong Kong, and Hong Kong is the #1 most expensive city in the world. And what they did is they called individual homeowners. I'm talking about apartments owner, individual, not apartments, condos. They name condos. It's not apartments. There's no apartment buildings in Hong Kong, but they call the condos owners, which most of us is a condos owners. I'm a condos owner in Hong Kong currently. I still do. But long story short is, the price correct 20, 30, 40% of the values because of 1997, the Asian market crash, and the bank come and after the individual owners, and they ask them to pick up a big part of the equity loss from the property. They were 80%, 75%, LTV, but all the drop of the market have been eroding the positions of the debt that the bank has been supplying the mortgage for. So we've seen this movie before, right? But that's why I come down to the philosophy. When you investing in market, you invest in market that's appreciated so high. I mean, it's exciting. It can make a lot of money, but all comes down to that is, can you? I think Warren Buffett had one saying is very true. When the tide subside, is very apparent, is the moment of truth that who is actually swimming nakedly, meaning that can you stay for that long? Can you hold for that long? So that's why I'm investing in US, because I believe the rent, if you buy it correctly, can still sustain. If the rent still sustain, you don't need to lose your property, and I think that's really important when we invest in real estate. And if the property is still cash flowing right now, we've done some of the work, or is already cash flowing, and that's what you have to put your money in, I think. An area that is decent with private ownerships. And when I was in Ohio last week, I spent hours driving in the areas of the neighborhood. I circled 3 to 4 hours on several days, and to drive and really look around the areas. And particularly, I'm looking at the roof of the houses on the other side of the road. I'm looking at the lawn, like have they cut the lawn, have they maintained the lawn, have what the fence is like. That's a lot of things you can review by driving. But I love cruising around the neighborhood, people call it. And you see people on the street, you see people is walking like this, or like, what I'm talking about, or not, all right, or just normal people. So I love doing that, and I'm still doing it because what it does is, you can survey the area by just doing that, whether that is like homelessness, whether there's poverty and stuff like that. So find areas that have decent private ownerships, mowing the lawn, they keep the roof nice, and they don't let the building and the sidings just go sideways, and they maintain it. So that's a good area. When you see those things, that's a good area, even though you may be new in the area, right? So I keep saying that I invest in real estate investors, and it's really come down to I'm going to quickly go into this: find the right market, find the right deal, execute it correctly, and then share the capital, share the growth with your investors. And so very lucky we have a case example and with our investors. And so we bought this apartments, 48 units, in 2018 January, and within 24 months we returned the apartments from the left to the right. We put in 300,000 capital improvement. We put in new roofs, all new roofs, and all new landscaping, and we renovated all the common area, all the suite in different degrees, and we're rebranding it. So they say 96% occupancy every month. So actually that is wrong. We have getting 100%, excuse me, 100% of occupancy since December, with waiting lease of in the beginning of December is 3 to 5, and now because I was in Ohio, so in the last week have 7. And the rent has been keep increasing. The rent, again, this is 525. We have just increased our rent to 550. So what it does is basically what I'm trying to tell you is, if you're able to buy right, and if you're able to get in the market correctly, if you do the work that you have a strategic plans going in, and you can turn something like this over and over again, right? And of course, you have to have the right team, right? Of course, you have to do it in a way that is conservative. You underwrite it conservatively, and you have to be hiring the right property managers, and you have to care. You have to go to the property and manage the properties, manage the property managers, and months in, months out, right? But we're talking about increasing the property values and share with investors. And when you have such a good result, what it does is basically, going back with what I talked about earlier, is the risk is that you are exposing yourself to exposing your financial risk. Is if you can buy apartments, multiple stream of income with multiple tenants, and what you can do in years down the road. It's about getting the right executions, right? Coming to this diagram, executions correctly, and share the profit with investors. So we have one opportunity. I'm going to quickly, I'm not turning this to a selling pitch, but I just want to quickly sharing with my investors here and some of you guys. So we have these 69 units in Dayton, Ohio. And last week I was in Ohio because I was doing the physical due diligence. We walked every single unit, and the highlight of this is in the C area, C plus area, circulated by B and A areas. And the other areas, we talk of 1 to 3 miles away east of this property, have property that is in the range of $300,000 to $400,000 per doors. And we just love investing in Dayton because it has cash flow opportunities, and yes, you're going to need to hold for a longer time, but there are cash flow opportunities. And so for investor who has been investing with us, and so we are still looking forward to investing with them, and when putting the hard work capital onto deals that make sense, and the deals that we spend the time to do the due diligence on, the deals that we walk every single unit, and to keep hiring the people that we have faith on, and so keep doing what we have been doing with our investors. So it's typical cash flow, value add growth opportunities that you're coming in at the right price and at the right areas. So but quickly moving on, is about creating value from start day one, putting capital from day one so they can increase the rent, right? And also getting cash flow for investors, and that's why we invest in Ohio, and buying in the solid market. But I would say that even solid is, you need to buy in a substantial enough populations. In this market, we talk about 800,000 populations. It's kind of like Winnipeg size, so it's decent size, but not overly big. So, but then solid area is very, very important. That's why I spend hours driving around, cruising around the neighborhoods, and to because you can only Google. I say this: you can only Google Earth so much. You can only Google Street View so much. And I'm going back to when we're closing it. You have to be hands-on. You have to be boots on the ground. And some people don't really see that as advantages because they want to invest in companies or stocks, and that's just fine. I particularly like it because I can actually have a really good feel of my managers, my asset managers, my property managers, and my maintenance guys, and I can touch and feel, and I can change a lot. Again, it's all about the control, right? That it excites me. So, but I'm gonna quickly wrap up of what we do and of real estate of Hay2Brick. So we share with investors. So we have a little online program that we have been putting online with investors who want to get hands on and do it themselves. So it's 8 steps, multifamily real estate investing. So we detail how you find the market, how you buy the market, how you find the deals, how you create a relationship with the brokers, how you finance the deal, how you raise the capital, and how you find the property managers and manage it, how you do underwriting, and so on and so forth. So the 8 steps from the beginning to the top, and how do you do it yourself, right? And we also partner with investors, which is much more passive, and we have investors who partner with us, and we love to continue to be able to work with them. But all this going to say that we have different options for investors who looking for do it themselves, or we want to partner with experienced investor like ourselves. So and we love to doing both because we believe there's a lot of option in the world. There's no one way to feed it all. Some investors want to do it themselves. Some investors want to leverage the time with ourselves. So and the home study program is we had launched it last year, and we have hundreds of subscribers, and learn how to do it themselves, and congratulating them, and can keep doing it themselves, and see some of them logging online, offline, and I think it's fun to do it yourself, and it's great to do it when you have the time and energy to do it. I love to do it myself, so that's why I'm offering it along with the partnering with investors. So I'd love to wrap it up quickly. And this is I apologize, we go on a little bit longer than what we anticipated, usually about 30 minutes time. And but kind of wrapping up today's call, Zoom call. So we talk about market updates. We talk about why we invest in Ohio, why investing in cash flow investment. And we also share a little bit of information of upcoming opportunities of Claypool Apartments. So feel free to reach out to me. We're closing on June 5th. And so we have a little bit of time, but not too much time. I'd love to get on a call with you guys if you want to learn about investment, if you have questions about US investment. And I would love to get on the call with some of you guys on one-to-one basis and let me know. And so I haven't put on my contacts here, so my apologies. So my email is howard@Hay2Brick. I should have done it. That's just the beauty of doing this online thing. And this is my phone number. So feel free to reach out to me. And again, thank you so much for some of the very familiar face, Calvin. Welcome. And Shine that you're here, and absolutely Hillary. So I'd love to end it on today's call. And thank you for joining us. Short notice. And I'd love to see some of you familiar face. I know it's just all me and you guys and no talk, but I'm not sure if you guys can start a video. Feel free to ask me questions and or just say hi before you jump off the call. And I'm here until the very last one gone. But I want to say thanks for joining us today.
Hi, Howard. Can I speak?
Hi, Hillary.
I just wanted to say thanks. I just happened to see this invitation on, so I definitely want to get some more information on Claypool Apartments, because that first screen, you kind of bypassed it really quickly. But I also wanted to share with the other people here that I am an investor with you, Howard, and for the last, almost like two and a half years. Yeah. And I've been getting quarterly US checks every quarter from Howard, and like to the tune of like $785 US for the Amy Apartments. And it's been fantastic. It's like a turnkey. I don't have to worry about anything. I'm getting the cash flow. And that was on a $50,000 investment. And then there's going to be a payout for me, an additional 5%. So it's like a 12% return on money. Am I correct on that?
You're correct. You're correct.
So, and it's consistent and regular, and it's US, which is even better for me. Like, I just wanted to start a stream of income. So I'm definitely going to want to look into this Claypool as well. So I want to get some more information.
I will send you the information, Harry, and thank you so much for the shout out. And that absolutely didn't know you're coming online, and then
Yeah, my pleasure.
see you online. You looking great, and I hope to see you in person, Harry.
Yeah, it's good to see you too. So I just wanted to say, hey, Howard, you're the best. You really are. You're the real deal. So thanks.
You know, it's the moment like such as this why we have energies and keep doing with like investor like yourself, and back to you, you are one of the best investors, if not the best.
Oh, wow.
Definitely the best investor that we have opportunity to get to know you with, and continue to build the relationships, and we want to keep doing this.
Can I ask you one more? I wanted to ask you something. Are you going to be accepting RSPs as an investment possibly down the road, or?
Very good questions, Hilary. Yeah. In fact, I did send one email out early last month, I believe. So we are creating a structure, specifically a structure that can accept registered funds, so your questions, or our RSP, or our ESP, or RIF, or RIA, and our ESP, so TFSA, so all those kind of registered funds. We are working with lawyer, and we are jumpstarting it. We hoping to be able to share exactly on January 1st, 2021.
Okay.
So
right.
The question is, yes, we're working on something. And to tell you why we take us so long, because I've been talking about so long, and the long and short is the structure itself is very heavy. I would say, it requires a lot of input of capital in going in, but we decided that that's the right moment to go in. So hopefully that's answers your question.
Yeah, here. Thank you.
Yes, it's coming in. So I'm very excited. I got that questions all the time. Hillary, it's it's hit me on my back. He's like, why I'm not doing it sooner? So yes, yeah, thank you, Hillary. So, hey, and anyone else? I love to connect with all you guys, and then I have my phone number here, and email. Shoot me an email and call me on phone number. And so we want to take the time again. Thank you for everyone joining us, and thank you for the shout out, Hillary, and love to see you guys more, and you will hear me more on the next several weeks, because I'm also sharing more on the investment of Claypool. So looking forward to connecting with all you guys, and I wish you guys have a happy Wednesday. Enjoy the weather out there, and I think it's going to be nice for whatever is coming for the market and for the weather. So I hope you guys well.
Hey, bye, Howard. Thanks a lot.
Bye, Hillary. You're lovely. Thank you. Great. Thank you, LT, and I'm just looking at the message. Thank you, Soyar. Hope I didn't butcher your name. Thanks, Karen, and thank you, Kevin, and appreciate that. I'm here until you guys gone, and so thanks, Kevin. Yes, we will connect soon, and hope you're well in Vancouver. Yeah. Let's connect after the call, and love to my review. And thank you so much for everyone. I see everyone's gone now, and appreciate that for taking time to join us today. Thank you for your middle of the day, take a time and I'm glad to be able to talk to you guys all, to be glad to be able to share and continue doing what we do. Sorry, and actually, I just saw your email, so I will send you an email and looking forward to connect and appreciate that. Bye for now.